is Maya Weinreb, and this is the Bottom Line Live, coming to you every Thursday night to tell you more about bookkeeping. Because we all know that that's always everybody's favorite topic. Everybody wants to know about bookkeeping all the time, and so that's why we do this every single Thursday, and I'm really hoping that I can think of enough topics to do this 52 times this year, and then again, since the beginning of the year, and then again next year. So thank you all for being here. If I have repeats of topics, I hope no one notices. That's all I have to say about that. Okay, let me share this into the group, because I haven't done that yet. And then I will get started. And I also want to say that if you have any topics that you want me to talk about, or any questions that you have on bookkeeping, feel free to write the questions to ask me, because I do need more topics to talk about always, because I feel like bookkeeping is just not a never-ending subject. Eventually, I'm going to be doing webinars, and you're going to be hearing about like my feelings about things, and how I feel about the IRS and things like that, instead of actual bookkeeping information. So, let me spell this correctly. Here we go. All right, good. That is shared, and then Jerry or Nano will approve that for me in the group. Okay, so what I wanted to talk about tonight was cash versus accrual accounting and bookkeeping. And people get very confused on this subject because, it's words that don't get used very much. Obviously, cash gets used as a term, but accrual doesn't get used. So I'm going to get a really good definition of accrual for you. The basic definition of accrual is things, being accrued, meaning coming together, being added together, right? But I'm going to get an accounting definition for you, because I should have done that before this, and I didn't, so we're going to do it right now. Okay, so accrual accounting is an accounting method where revenue or expenses are recorded when a transaction occurs versus when the payment is received or made. And that might not sound like, such a big deal, or what's really the difference. And I'll go into it and I'll explain it, but I want to find a good definition for accrue. Accrue, okay, good. Having to do with sums of money or benefits, be received by someone in regular or increasing amounts over time. Accumulate or receive, such as payments or benefits, right? So accrue means for things to kind of come together. But then the accounting definition of accrual is where expenses or revenue are recorded when a transaction occurs versus when the payment is received or made. Hi, Lexi. Thank you so much for joining. It's nice. It's nice to have you. I love having a fan base of people who actually come to this webinar live every Thursday just to say hi to me and check out my hairstyle for that week or something. I don't know. No, maybe they want to hear about bookkeeping. Okay, so now what's the difference between accrual and cash accounting? It might not be something that you think about very often, but it's something that, you might get asked once a year by your CPA or accountant or bookkeeper and not really know what they're talking about. Or it might be something that you see on your tax return if you look at your tax return. Thanks, Lexi. Lexi says my hair is pretty. This is my natural hair, everybody, even though I always wear it straight because it's easier. Not that this is a fashion or beauty, episode, but so my hair is naturally curly, but naturally curly hair never looks the same way twice. So it looks like this right now. Tomorrow, if it's curly, it won't look like this. Disclaimer. Back to accrual accounting. Okay, So let's look at it this way. Most companies, most small businesses in the US, which most of them are small businesses, use cash accounting. So the transaction is recorded when it was paid or when the money was received. When do you notice a difference? Because you kind of go, okay, so what if I received it in January and paid it in March? Like, what difference does it make how you account for it for the end of the year? You're right, it doesn't really matter for that. But let's say you received a bill in December and you paid it in January. Now at that point it starts to matter on your taxes whether you counted it in December or January because it's a different year. Bigger companies, and even sometimes e-commerce companies, but usually when they get bigger, but really big corporations always use accrual accounting. Why do they do that? I don't know. Maybe they like to keep things complicated. No, it's not really complicated. It's just like this, basically, right? So you get a bill, and you enter that bill into Quickbooks or into your accounting software, or whatever it is that you're using, or in your Excel spreadsheet. But no, you wouldn't want to do accrual in Excel. But let's say you enter it into your accounting software, right? You have this bill. You have all these bills that came in. If you're doing accrual accounting, as soon as you enter the bill, meaning the date that's on, so the bill comes in, it was dated July 7th, let's say, right? So when you enter it in, you're going to use the bill date. So that was July 7th. So that is when, in accrual accounting, that money is technically now spent. You might not pay the bill for 30 days, 90 days, 45 days, based on how your company or your policies are, but in accrual accounting, which very large companies use, that bill is considered spent as soon as it's entered. Same with income. If you receive, or rather, if you enter an invoice for somebody, you are invoicing them, the invoice date is the date that you would count the income. So if you were on accrual accounting, which again, this is usually only used for very large companies, but I'm just explaining the difference here. If you were on accrual accounting and you received $100,000, or sorry, let me take it back. You sent a $100,000 invoice in December, but you didn't get paid for it until January, you would count it in December if you're on accrual accounting, and you would pay taxes on it in December. Why don't most small companies use that? Because it's hard to pay bills, or it's hard to pay anything with money that isn't actually in the bank yet. It kind of makes sense for really huge corporations because they have so much money coming in and going out that they want to make sure that they count things as soon as the date, so their accounts receivable, meaning what's owed to them, is as of the date of the invoice, and their accounts payable, meaning what they owe, is as of the date of the bill. So that way they know what their margins are, what they have available, right? Also, really big companies, even small companies, can get loans based on their accounts receivable. So if they need, let's say you have one giant client and they pay you $100,000 2 times a year, and that's all you have, or maybe you have a couple of other ones but they're really small. It's really easy to get a loan, an accounts receivable loan, based on your invoice if you know that money is going to come in, so that way you can keep your company going, paying payroll or whatever. But again, most companies in the U.S., because most companies in the U.S. are small companies, there's not a lot of giant corporations in the U.S., use cash accounting. And that is so that you can't count any money. Well, one, you don't pay taxes on it, and two, you're not expected to use it until it's in. So when the money comes into the bank, that's when you count it as income. When the bill gets paid, that's when you count it as an expense or as a paid bill, right? So you can still keep track of your invoices and your bills without having to do cash accounting, or rather without having to do accrual accounting. You will know what accounting your CPA or tax preparer uses by looking at your tax return. It will say on there somewhere near the top, I don't know exactly which line, it will say either cash or accrual. And maybe you've never looked at that, maybe you didn't know what that meant, but now I'm teaching you all of the interesting information about what that means. So if anybody has any questions about that or anything like of how that would apply, please let me know and I'll definitely answer it. Really big companies, like I said, corporations, there are some other companies that work better in accrual. We have some, like, for instance, production companies that get paid by huge corporations, like they get paid by Disney or they get paid by Amazon, and those companies don't pay them until 90 days, sometimes 120 days. So they use accrual accounting. For them, it makes more sense to pay their taxes based on what's invoiced rather than what's paid. They have to be able to plan long term, all these different things. But again, most companies in the entire country, I would say, I don't do bookkeeping for everyone, but out of all the companies that I do bookkeeping for, which is about 120 companies currently, and all the companies I've ever done bookkeeping for, which is hundreds and hundreds of companies, I would say 95% of them are in cash accounting. So it's not something you usually have to worry about, but if you're not sure, check your tax return and it'll say on there whether it's cash accounting or accrual accounting. Okay, let's do some examples of this. Okay, so let's say, and some of the big companies too, just so you know, they do accrual accounting not even for the whole year for taxes, but they do it month by month. So when they are looking at what are their expenses for the month or even the week, they're looking at what was accrued that week, meaning what was added to the bills or added to the, invoices or added to the expenses that week, regardless of when it was paid. So let's say you work for a company that pays you payroll every 2 weeks, but they are accrual based. They are going to take that payroll and make these entries in the books, which is why I say it's also more complicated, to show that payroll bill to you, right, the payroll liability, meaning they owe it, was accrued on the week that you worked, not on the week that they're paying it out, which is maybe, 2 or 3 weeks later, right? So that way they always know, based on that time period, what was the exact money that was accrued, like what came in as going to be paid, what came in, like what was owed and what was coming in at every moment. So it's super detailed. Whereas cash accounting is very detailed, but on a different level. So you don't know, like let's say you do your payroll every 2 weeks or you pay your payroll once a month. Obviously, the moment that your employee worked 1 hour, that payroll was owed. It's a liability. But you don't pay them for 2 or 3 more weeks or even at the end of the month. And so in your books, it only shows up when it's paid. So the payroll was paid on, January 5th, but it was even for December. But it's going to show up in 2022 at this point books. Or the payroll was paid in on April 5th for the last 2 weeks of March. The payroll was owed, it was a liability in March, but it's not going to get paid out until April. So that's why there's 2 ways of looking at it. In QuickBooks Online, if you're entering invoices and you're entering bills, you can click a button to see your accrual. It's not going to be as detailed as like I said, the corporations who are entering things in by the day it was accrued as opposed to the month or, the year. But you will be able to see what is owed to you and what you owe if you click the button that says accrual, if you click the button that says cash. QuickBooks, for some reason, defaults to accrual. So sometimes if you go into QuickBooks and look at your reports, it looks weird, right? Like you're a small company and your QuickBooks says that you made $500,000 so far, but you know that you only made $250,000. Why does it look like you made $500,000? Because you invoiced $500,000 this year. So you have to go back and click the button that says cash, and now it'll show you what's in and not what is invoiced. Do you guys see what I'm saying? So it's not super, super complicated, but it is different, and so people do need to understand it. Sometimes CPAs complain that they are getting accrual reports when the client is a cash client. Why is that? Because QuickBooks defaults to accrual. So as soon as you click the button Or if you don't click a button, you don't know how to change the QuickBooks default or whatever, it's going to just print in accrual, and you're going to send that to your CPA, and the CPA is going to do your taxes wrong unless they notice. So you always want to make sure that you know how you're reporting your taxes for your company, and that you're giving your CPA the correct reports. If you're working with TaxHive, make sure you know, based on your last tax return or based on what TaxHive says, how are you being taxed, because it's your CPA who will determine that. And I think you can change it. I don't know all the rules on that, but on your tax return it will say, and the CPA will use the last tax return. So if the tax return says cash, they'll do it in cash. If it says accrual, they'll do it in accrual. So you want to make sure that you know if you're trying to do it yourself. If you're not trying to do it yourself, you want to make sure that when you receive your reports from your bookkeeper, that they say cash if you're cash and accrual if you're accrual. Of course, if you're asking them for an accounts receivable report, meaning you want to see what is owed to you, then you're going to see it's going to be accrual, because what's owed to you is not a cash report. It's always an accrual report. Same with if you want to see what you owe, so you're asking for an accounts payable report, it's always going to be an accrual report because it's not a cash report because the money's not paid yet. If you just want to see a list of what bills you paid, that's a cash report. Do you guys see what I mean? We see the difference there? So, for instance, even if you are accrual accounting method, but you are sending out 1099s to all your vendors, you're always going to send it out cash report, because you want to know what you actually paid them. You don't really care about how many bills you have for them, because most likely they're doing their taxes based on money that actually came in. So you give them always a 1099 based on what you paid them. So you run a cash report to see what you paid them, and then you give them their 1099, right? So I know we haven't talked about 1099s in a few weeks. I needed to recover from 1099 season. Now we're in tax season, so I'm going to tell you guys more tax stuff. We're going to make tax sexy again. Just kidding. It's not sexy. I know it's not sexy. Okay, so good. And guys, let me know if there's any other questions. I know that people get intimidated by the subject of accounting and taxes and bookkeeping, but I'm here. I want to make things simple. I really, really try to keep things simple for all of my clients, for all the consultations. When I do consultations with people, when I teach them QuickBooks, I try to teach them exactly what they need to know, what their workflows are. In fact, I should get some reviews. Lexi, if you're still there, we should get some reviews from my consultation clients, and my QuickBooks, the ones that I just teach QuickBooks to, because I make it so simple, and it's a subject that could be really confusing. And of course, I don't need to teach them everything about it, because they're not going to use everything. I want them to understand the basics so they can use it. And if they run into a transaction that they don't know how to do something with, then they can email me, or we can book another consultation. So I really don't like how accounting and taxes and bookkeeping are made to seem really complicated. I don't like it. It makes it a scary subject when it doesn't need to be. What's the worst thing that can happen? Of course, you want your taxes to be accurate. You don't want to ever get audited. You don't want to owe the IRS money, all that. But what's the worst that can happen if you make a mistake? Let's say you are, in all honesty and good faith, you tried to do it right, but you didn't totally understand it and you did it wrong or something. Okay, the worst thing that can happen is you'll owe more money. You'll owe a penalty. So it doesn't have to be this big stressful thing. So I really want to impart that to people. At the same time, you don't want to lie on your taxes. Either way, you don't want to lie where you pay too much in taxes. That's fraud. And you don't want to lie where you don't pay enough in taxes. That's fraud. So you want to just do it right, to the best of your ability. And sometimes maybe the best of your ability isn't good enough, or you don't have really time. Hire a bookkeeper. I've been working with TaxHive. I know a lot of you are working with them now. And we were talking about this a couple of days ago. They get people coming to them with no reports and no books. And we're talking mostly companies here, right? Because individuals, it's a little different. There are things you need to track as an individual if you're an employee, but It's not as many. As an individual, you need to track, your medical expenses, your donations, interest paid, things like that. But it's not that many things. But if you own a company, then that's when you have to be able to give them a profit and loss statement and a balance sheet. And either companies come to them and they don't have any books, they are guessing, or they do this thing, guys, we call this the 3 days in the closet, where they're literally hiding. Someone told me it was a week once and recently, and I thought that was even worse. But in the closet with the box of receipts and the computer and the bank accounts for a week or 3 days, like, it's just unpleasant, guys. Let's not do that. So we know that this is a needed item, that people need help with their bookkeeping. And I want to help you make it more simple. I don't want it to be complicated. And I will never tell someone they can't do it. Probably the only thing that I say you might not really want to even try is registering for payroll, because it is complicated, and it's not that you can't do it yourself. You can look up what the words mean. You can call the entities. You can get help or do it yourself, and you can do it. It's just so much work and hassle, and even for my payroll specialist, it takes hours to register a new person for payroll. So that's something where I find that it's a little more complicated than the average person wants to do. Unless you like doing your own tax returns, you probably don't want to register and set up your own payroll. You can do it. You have the ability to do anything you set your mind to, but do you want to? Right? So on bookkeeping as well, you absolutely can do it yourself. If you're a new company, you're just setting up, you don't really have the funds to hire someone yet, absolutely do it yourself. If you're a new company and you 100% don't want to do it yourself, hire someone. If you're a business owner, your time is worth thousands of dollars an hour in potential income, tens of thousands, hundreds of thousands on your sales, your marketing, your expansion, all the things that you can be doing, and you're sitting there with a headache trying to figure out your bookkeeping. It's not a good investment of your time. But that doesn't mean that you don't have the ability to do it, or that you shouldn't know how to do it, right? So you absolutely can. I will never tell you can't. But I do think it's a good investment to hire a bookkeeper. It doesn't have to be me. It can be your bookkeeper down the street. It can be, whoever that's a good bookkeeper. But have someone do it. And make sure they're doing it right, so that, to tie this back in, when you send your reports, or when they send the reports, they understand what the difference between the two reports are, and they send the right one to your CPA or tax preparer based on your taxes and how they should be being done. So this is a very important point, and I really wanted to explain it because it's not even that it's that people ask me about it a lot. It's that I know that people don't ask because they don't notice it and they don't know what it means, and so they ignore it, and it can cause problems. And they say, how come my report doesn't match your report? Well, because I ran it in cash and you ran it in accrual. Things like that. So it's just something that you should pay attention to and know about. Okay, so back to cash and accrual. Let's do some examples. And again, if anybody has any questions, feel free. I will explain it, answer any questions. And also, if you're not watching this live and you want to reach out to me, you can send me a Facebook message. You can email me, maya@solvencynow.com. You can go to my website. I have a blog on there also that answers a lot of these questions. I don't know if I have these videos on there yet, but they will be soon. Okay, good. So examples of cash and accrual. So, okay, so let's say you are an e-commerce company and you want to know, let's say you only buy inventory or you only buy stock or whatever twice a year, and you want to be able to run it accrual because when you run it cash, your stock purchases or restocking fees, right? They only happen twice a year. So it's let's say your P&L looks like this, and then twice a year you have these huge expenses. And it doesn't make sense. So maybe in that case, it's a good idea to use accrual. So you base it on what is used, how much stock is used at each point. And that's how you can see your accrual. When did it get used? When was it incurred, right? Or they split it up. There's different ways to do it. They can split it up by a 12-month period or, a 52-week period and just divide it so it's more even. Same with I know a lot of these e-commerce guys, they get paid out by Amazon twice a month. But Sometimes Amazon, I think, takes 30 days to pay them out. So you're getting paid for a prior period. So when you have cash accounting as e-commerce, what goes into your books is based on when it showed up in the bank account, and then you get this report from Amazon, or you get this report based, from your e-commerce assistant or whatever, that says that you earned this money in January. And you go, well, how come these don't match? Well, because you earned that money in January, they put a 30-day hold on it, and they paid it out 2 weeks later, and you got it in March. And that's why it doesn't match. So is it better to do, accrual accounting for e-commerce? Maybe. Depends on what you want to see. Depends on how important it is to you. Depends on if you're looking at it for short time periods or just the year. Because in a year's period, it will kind of balance out. So it's up to you and your CPA. But that is one way that you can really see, the difference. Let's say you're a contracting company. Most contracting companies are running on cash accounting. When they get paid, when that check from the customer or the client shows up in their bank account, that's when they count it. And if your customer never pays you for some reason, which of course we don't want, it's not income, you don't have to pay any taxes on it. Sometimes, here's a really good, kind of segue. Sometimes people ask me, can we just write off the invoice to, I can't even think of the word right now, but basically bad debt. Can we write off the invoice to bad debt? No. If you are on cash accounting, there is no such thing as bad debt, because if you didn't get paid for the invoice, you never would pay taxes on it. You only are ever going to write an invoice to bad debt if you do accrual accounting, where you would be paying taxes as soon as the invoice was written, right? As soon as the invoice was incurred or accrued, that's when you're paying taxes, and that's what, if they never paid you, you're going to write it off to bad debt so that you get a deduction off of your income that you already showed, right? So, and sometimes we forget this because as accountants, as bookkeepers, it seems like, oh yeah, just write it off to bad debt. But no, you just either void the invoice, or basically, unless you're trying to keep track of the fact that that invoice occurred, but if you void the invoice because it was never paid, that's actually accurate. If it's in a closed period where your books were already closed, you can ask your bookkeeper, ask your accountant how to make the entry, or they can do it themselves to make the entry to show it correctly. But even still, the fact is the invoice was never paid, you never paid taxes on it, therefore you can't write it off to bad debt. So that's something I do get asked about a lot, like, oh, can you write all these to bad debt? No, let me explain to you why. But I can void them for you because you were never paid. Oh, okay, that's easy. You're right, that's easy. Why? Because cash accounting is much easier. And most, like I said, 90% of companies more than 95% of companies that I've ever worked with use cash accounting. Now, I work with companies that are either just starting out, like where I'm doing consultations for them. Maybe I'm doing bookkeeping for them. They're at about 100 to 150 to 250, so they hire us to start doing bookkeeping, all the way up to 5 to 10 million in revenue, and they're all using cash accounting except for very, very few. Like I said, some of the e-commerce guys, some of the ones where, for I don't know why, that's what their accountant preferred. So to be safe, most companies in the US are using cash accounting, and it's pretty simple because it's when the money comes in, you count it and you can spend it, and when the bill gets paid, it's no longer in your bank account. End of story. One thing to keep track of is if you write checks and they haven't cleared yet, the check's still written, so you don't want to spend that money. But let's say it never gets cashed. So now what do? You either are going to reissue the check, or you're going to void it because the person never cashed it, and you can ask them about it, right? But basically, you want to not spend that money, but it hasn't come out of your bank account yet, technically. So you have to be able to reconcile the fact that that money exists, as in, you already wrote the check, but it wasn't cashed. Or what you're going to do is not write checks and get modern and send ACHs. And I know some companies don't accept ACHs still, but most companies do. So to avoid having these checks that you need to pay attention to, don't write checks, send ACHs. I send everything electronically these days. So that's my brilliant solution. I'm sure most companies are already doing. Checks are pretty antiquated these days, but of course you can still use them. They are a payment method. They work. You just have to make sure that you don't spend the money before. You have to count it as spent, even though that's kind of like accrual. You wrote the check, so it's out of your bank account. You should just think that way about as soon as you wrote the check. Okay, good. Well, my 30 minutes is up. Hopefully I have really explained this topic. And like I said, if anybody has any questions, feel free, email me, Facebook message me, LinkedIn message me, Instagram message me. I'm Maya Weinreb or Solvency Now Bookkeeping on all of those. You can email me at maya@solvencynow.com. You can go to my website, solvencynow.com. I'll put that in the comments here as well. And thank you so much for coming. Thank you for all of you that viewed this live and the rest of you that are watching this because you were very curious about the difference between cash and accrual accounting at a later date. You still are allowed to email me or message me and let me know if there's anything I can help you with. And if anybody has any other topics that they want to know about in bookkeeping, let me know. I'd love to do a webinar on it. Thank you so much. Have a good evening, everyone. Bye.